A very good morning and warm welcome to the show. I thank you so much for choosing Smart 24 TV. It is the 24th of July and my name is Anthony, here to give you an update on the financial markets. Now, of course, Altex East Africa is proudly bringing you this show. And with Altex East Africa, we are saying under ZABU initiative, you can be able to invest in treasury bond markets across East Africa. Altex East Africa is saying you can do something new. Simply grab your phone to be able to enjoy this experience called ZABU, My Money, My Future, and dial *292#. When you do so, you will be able to access the market through Altex East Africa. Altex is regulated by the Capital Markets Authority of Uganda, and of course there has been a lot of trust that investors have been able to put at Altex because they are licensed by the regulatory body. The markets at Altex open at exactly 8 a.m. and close at 3 p.m. East African Standard Time. With Altex, we are saying no hassle, more money, my future, and you can do something new. Of course, let's reflect on last week's performances before going ahead to look at the new week. In the international market, this week is going to be a remarkable week of trading with some of the busiest ventures out there for the week ahead. We have, of course, the quarterly results, the second quarter results from different companies such as Apple, Facebook, Google, and a couple of other very big companies on the S&P 500 and the Dow Jones in the international markets. While here in Uganda, we are, of course, getting ahead of the financial year. The new financial year, 1 month, is almost down. How has this impacted the performance of the different stocks on the stock exchanges? And then when you look at the treasury bond market or the fixed income market, how have the variations come about in as far as the rates are concerned? So it's a busy week, and we'll be able to try to break down a little bit more of what will be happening across the board. But let's have a look at the Uganda Stock Exchange performance as per Friday. Now on Friday, there was a total of 10.7 million shares that was traded on the Uganda Stock Exchange. The Uganda Securities Exchange or Stock Exchange is the principal stock exchange for Uganda. We have 18 listed companies, 8 of which are cross-listed from Nairobi, and the 10 domestically listed on the exchange. Compared with Thursday, USE trading on Friday was actually much better with the turnover improving by over 585%, meaning big counters actually contributed to this particular performance. When you look meticulously on especially the stocks that participated in trading, they included Wumeme, Stanbic Bank Uganda, MTN Uganda. Fairly, the volumes were not as much, except for Bank of Baroda, which had over 10.7 million shares that were traded. That means the bigger counters contributed more towards the turnover, and then stocks like Stanbic Bank and Bank of Baroda contributed in a lot in as far as the volumes are concerned. The market capitalization also raised to at least a tune of 18.1 trillion. We finished off the first quarter and second quarter below the 18 trillion mark in market capitalization. That means that between the first and second quarter, there was not much appreciation in prices, generally speaking, overboard on the Uganda Stock Exchange. However, current performance indicates that the market capitalization is actually going up to a tune of now 18.1 trillion Ugandan shillings. Now, in aggregate, 6 equities participated in trading on the Uganda Securities Exchange, ending the day with just a single gainer. There was one gainer, and this was namely Nation Media Group and a couple of other losing stocks, especially the cross-listings, including KCB, Centum Investments, East African Breweries Limited, as well as Jubilee Holdings Limited and Kenya Airways. Equity Bank Limited also was among the losers. Amongst all the participants, none of them came on the gaining side or the losing side. So the performance was entirely based on the status quo or the prices as they are on the market right now. And that means investors probably feel like they are comfortable with the market. Investors range from different kinds of people, individuals and fund managers. And when they're investing, and remember the whole price model, how the prices come about on the exchange is entirely dependent on demand and supply. So if those holding stocks feel that they are comfortable with the current price, then they are willing to sell at that price. And if at all, the buyers are also willing to buy at that same price. So both the buyers and sellers in this case, it means they have the same mindset or the same sentiments. That is exactly what happened on Friday. The prices remained constant for all the participants in the market. Now let's look at the top participants. Remember, we had 6 participants. I think this is the highest number of stocks trading on a single day in the past couple of weeks. If I'm not mistaken, could even be 6 weeks. We've been having on average 4, 3, sometimes 1, sometimes 2 equities listed participating in trade. However, on Friday, it was a quite good move on the exchange. When you look at the top participants, Bank of Baroda, Uganda, led them with a total of 10.7 million shares traded. Bank of Baroda is still rallying its bonus shares. Bank of Baroda issued extra or bonus shares on the 7th of June 2023. On these terms, it was of course trying to comply with the currently new regulations that are going to be imposed on all commercial banks or financial institutions starting 2024. Minister Kasaija came out very clearly this year before the reading of the budget and said they will be raising that through the Bank of Uganda the minimum capital requirements of all financial institutions, starting from Tier 1 to Tier 2 and to Tier 3 commercial or financial institutions. Now, banks are inclusive in this particular raising of the minimum capital requirements, and this was raising from actually about 25 billion Ugandan shillings to 150 billion, but that's going to be in phases. They're not going to take it all the way up. We're going to first start with a minimum capital requirement of 125 billion, and then we'll go to 150 billion, which is the exact end. The microfinance institutions also will have their minimum capital requirements adjusted from at least 1 billion to 25 billion, where the commercial institutions or commercial banks have been. So it's a period of pulling up socks, and Bank of Baroda is just doing that. In the efforts to have these bonus shares going, the Bank of Baroda at least slid backwards in terms of valuation on the market, from 85 on average, 85 shillings per share to on average about 16 shillings per share. Now, as per the Friday trades, Bank of Baroda slightly lost some bit of value at 0.2% depreciation, coming down by 0.03 shillings to a price closing of 15.0 Ugandan shillings. However, Bank of Baroda Uganda is still amongst some of the most valuable companies, in the 14th position in the market, and currently holding 37.5 billion Ugandan shillings worth of market capitalization. On Friday, there was at least 10.7 million shares traded at 161 million Ugandan shillings. The shares outstanding continue to be at 2.5 billion shares and 37.5 billion market capitalization. Current trading, of course, on the Bank of Baroda stock has showed significant depreciation due to the fact that during the bonus share, again, the company had to bring down the price to be able to accommodate more shareholders. So what is a bonus share in this case? To you, my viewer, who might not understand this, when you have a company issuing shares for the first time, they issue a fixed number of shares, and these are floated on the exchange for the very first time. And when you look at, for example, Bank of Baroda, Uganda, it's one of the earliest listings in terms of trading on the exchange in Uganda, because the company got listed as early as 2002 on the 14th of November. Now, since then, the bank has not been able to get more money from the public. Whatever price changes we see do not affect how much the company is earning, because the company collected money only at the initial public offer. And this is where most shareholders actually get lost and get concerned. They think that probably when I'm buying shares from Bank of Baroda, I keep on giving Bank of Baroda money. No, the money you buy after the secondary offer goes into you possessing those shares that were bought at the initial public offer. But it's not like the company is selling any extra shares. You're just literally a retail buyer. It's like somebody goes out and buys a wholesale and then retails to other people. That's what happens so in the initial public offer, it's like the wholesale, and you have companies issuing shares for the very first time, and these shares are given out to the public and the company takes the money. Now, on the secondary market, where we have a prolonged period, because in the initial public offer, we have a particular time frame in which we have to operate, and this time frame must be observed without fail. Now, when you have this timeline exceeded, you have to go into a secondary market as a must. There are rules actually. I think we shouldn't have an initial public offer more than a month. And when you have that period exceeded, then you have to go into the secondary market. Now, on the secondary market, you don't have the company getting more money from the public. The shares that have been bought as per the debt, those are the shares that are going to be exchanged in terms of buying and selling on the secondary market. So if the company gets all the shares that they had intended to sold, the company has been fully subscribed to, or the initial public offer has been fully subscribed to. But there are cases, more often than not, when the company's shares that were intended to be sold are not all sold on the market. That is under subscription. And then oversubscription is when we probably have the company even issuing within the initial public offer period extra or bonus shares in order to accommodate the huge number or the demand that is in the market. So that is an understanding of what happens on the secondary and the primary market. Now, the bonus shares are those shares that are issued after the initial public offer at a subsidized price sometimes, all right? And these shares are only sold to the shareholders as per that debt. I hope that's very clear. So don't think that everyone is benefiting from this bonus share, because the prices have been brought down only for the shareholders to be able to buy extra shares. That is the bonus share. And there's also a rights issue, which is quite very closely related to the bonus issue, where you have extra shares issued, and these come at a subsidized price to everyone, all right? But the bonus share goes to only specifically the shareholders. That is something I wanted to make very clear, and I hope our dear viewers, you remain very conscious of that as you invest in some of these institutions. Away from Bank of Baroda Uganda, one of the other participants was MTN Uganda. MTN Uganda at least traded 11,050 shares following Bank of Baroda in volumes, and Stanbic Bank Uganda traded at least 11,000 shares, whereas Wumeme traded at least over 3,500 shares. All these stocks maintained their prices. Uganda Cranes also came in with 800 shares, and yes, those are the 6 participants in the market. Stanbic Bank came with 11,000, maintaining a price of 26.0. MTN Uganda maintained their price at 170.0, whereas the DFCU Bank, by the way, DFCU Bank also came in with a volume of 1,021, maintaining their price at 264, and the Umeme stock also maintained their stock at 420 Ugandan shillings. So the prices remain stable, implying the investors are pretty comfortable with what they're seeing on the market as per the participation in Friday trade. This week we could have a different picture. We keep close monitoring, or especially on the stocks that have issued dividends like Umeme, as well as Stanbic and DFCU Bank. DFCU Bank is issuing dividends for the first time in 2 years, which is something every investor should be looking out for at this point in time. So let's watch and see how the day and the week goes ahead of the closure of the month of July. But regarding the performance of the market indices, the benchmark index, the Uganda Securities Exchange All-Share Index, dropped off at least 7.98 points, down to 1,050.45 points, representing a 1-week gain of at least 1.82% and a 4-week gain of 3.97%. Overall, year-to-date losses now at 13.37% on the benchmark index. As per the other indices, the LCI, the local company index, at least dropped off 0.01%, especially due to the drop in price by Bank of Baroda Uganda, down to 269.93 points. That's the trading, my friend, from Uganda. Let's move across board to Nairobi and have a look at the 66 listings on the busiest stock exchange in East Africa. Nairobi Securities Exchange saw at least 45 equities on average trade on Friday. Now, the day ended with 20 gainers, interestingly, just 18 losers. The day ended with CIC Insurance Group, at least coming in with the biggest gain at 10% improvement, up to a price of 2.20 Kenyan shillings per share. CIC Insurance was followed closely by Express Kenya. Express Kenya came in with a gain of 9.29%. And Uchumi Supermarket at least gained by 8.33%, whereas Crown Paints Kenya added at least 4.76% of value. On the losing side, TransCentury East Africa at least came out last with an end-of-day price depreciation of about 5.21%, whereas the Sasini Tea and Coffee lost 3.57%. Amongst other losers included the East African Cables, Samia Africa, TransCentury, as well as Safaricom there. Now, the biggest trader on the day was CIC Insurance. And CIC Insurance this time round had a volume of 6.11 million shares, whereas he was followed closely by 970,000 shares of Safaricom and Equity Group Holdings at 798,000. KCB Group traded just 498,000 shares. In as far as the All-Share Index, which tracks all the 66 listings on Nairobi Securities Exchange, is concerned, there was a pairing of 0.25 points down to close to about 110.65 points. Markets in Nairobi are showing signs of recovery after a period of a series of losses, and especially the major counters like Safaricom, but they still leave a lot more to be desired in as far as the performance of the busiest and oldest stock exchange in East Africa. The trading on Nairobi Stock Exchange has been marked by a very low local participation in markets, but that is, local investors have been very few, but also the fact that most of the companies are running out of cash and they're in need of extra cash. So there's been a lot of need for bonus shares to be issued, need for getting more listings which haven't come in so quickly. So there's still a lot really to deal with. The interest rates in Kenya have also been quite high, so the investment environment hasn't been that friendly, so to say, in Nairobi as per right now. Their currency has become stronger, however, against the dollar, there's still a lot more to be done in order to retain the currency's former glory. But there's a lot of hope that this will be achieved through the Central Bank of Kenya's policies and the interest rate hikes. Regarding of the performance of the NSE 20 and the NSE 25, the NSE 20 at least decreased by 0.38%, and the NSE 25 dropped off at least 0.28%. Let's go to the international markets and have a look at what we're looking ahead of the busiest week in the summer of Wall Street. Now we are starting a week which is going to be very busy on Wall Street, and more than over 150 S&P 500 companies are set to report quarterly reports in this week, headlined by Microsoft, Alphabet, Meta, and a couple of others. Amid this earnings rush, the Federal Reserve will announce its latest policy decision this Wednesday afternoon and is expected to announce another 0.25% increase in the benchmark interest rate. That is something that is causing a lot of worry amongst investors, but still there's a lot for the United States to do. The currency has been resilient and quite strong, but the Federal Reserve is still gripping so much on the rate hikes. The economic calendar will also keep investors busy with the first read on second quarter GDP. Two looks at consumer confidence and then inflation data, and an initial look at manufacturing activity in July on the schedule. This headline blitz will follow a week that saw the Dow Jones Industrial Average take on a leadership role in the market, rising by 2.1% during the week last week, with a blue chip index finishing a 10th straight winning season last Friday. Meanwhile, the Nasdaq Composite served as the week's lagging behind and falling by 0.6% on Friday. The benchmark S&P 500 split the difference with at least a rise of about 0.7%. The Nasdaq was dragged down mainly by the results of Netflix. Netflix showed up a very, very poor performance, as well as Tesla. Tesla prompted investors to pair their exposure to two of the first year's tech high flyers. Whether this pattern continues this week to play out during the earnings seasons will be on the week's key storyline for investors. Thank you so much for tuning in and for watching Smart 24 TV. My name is Anthony. Remember to follow me on Twitter at Anthony Sebale, and follow Smart 24 TV at Smart 24 TV Now on Wednesday, we'll also be talking to a couple of investors in the cryptocurrency markets here in Uganda. So if you're a cryptocurrency enthusiast, better stay tuned on financial markets and on Smart 24 TV for those shows coming ahead. Otherwise, I wish you a very lovely Monday. Have a good day. See you tomorrow. Bye for now.